and anybody else who joins in, they can catch up in a minute. So welcome everybody to our Booking 101 presentation with Baker Tilly. Before we get started, I'd like to do just a quick little introduction about who we are and what our services are and what kind of events are coming up. So we are here with the Innovation Quarters and the Regional Business Center. The Innovation Quarters, we offer a 6-month-long incubator program, and that helps new startups succeed, and it offers one-on-one mentoring, programming and training, networking and events, and a beautiful collaborative workspace that you can come and work here for free. It's a free program. If you're interested, you can take a look at our website at innovationquarters.ca. We run this program twice a year, and our next cohort is starting in November, but if you want to apply for the program, apply before October 13th on our website, and it's offered in French and English. And finally, we have our co-working options as well. Like I mentioned, the space where you can rent the space, you can rent desks, meeting rooms, private rooms, or a boardroom. So if you want to take a look at the spaces that we have available, you can also visit our website at innovationquarters.ca. And our co-host for the event is the Regional Business Center. They're a one-stop shop for information and guidance on starting, expanding, and operating a business. They serve the Greater Sudbury, Espanola, Manitoulin Island, and the surrounding area, so they have a bigger catchment area than the Innovation Quarters. And they offer confidential one-on-one consultations, business plan support, market research, business registration, and more. So if you have questions like how do I start a business, how do I register my business, you can make private appointments with them and they can help you with that. And we have some really great upcoming webinars happening. So, October is, we have Small Business Week happening during the month of October. So we do have a lot of great events. So we have our entrepreneurship series that are co-hosted with the Regional Business Center, where we have Exploring Entrepreneurship on October 17th and Starting a Small Business on October 22nd. Those two are very introductory. So people are just looking to get information on how you even start a business, what are the steps. And then en français, we have Rédaction d'un plan d'affaires, which is about business plan writing in French, and it's held in partnership with Impact ON, happening on October 18th. We have October 24th, CRA tax tips. So I really highly recommend that if you're doing today's bookkeeping event, that you also register for the CRA tax tips event. And that's hosted by the Canada Revenue Agency. So it's just going to be a great tandem to have those back to back. And then on October 31st, I'm really excited to talk about hiring, training employees, and funding resources. That's going to be co-hosted by Pierre from NOHFC and Dwani from Spark Employment. And really how it's going to work is they're going to talk about there's funding on how to get wages subsidized by NOHFC, so you can hire somebody for like up to 50% of their salary paid by the government, which is amazing. And then Spark offers other funding resources where you can pay to have your employee trained and get funding for that. So really amazing opportunities, October 31st. You can go to either innovationquarters.ca or regionalbusiness.ca to register. We have a shared events calendar. So without further ado, I'd like to introduce Ginette Philion. With years of experience in bookkeeping, Ginette started with Baker Tilly in 2011. She's had the pleasure of working with many clients in different industries. And as the world continues to adapt into AI and computerized bookkeeping, Baker Tilly's shifted their bookkeeping processes, and Ginette is excited to share some of that with us today. So welcome, Ginette.
Thank you.
I'm going to stop sharing and you can please take over the presentation.
Perfect. So let me just get my presentation up on the screen. All right, so thumbs up, you can see my PowerPoint.
Looks good.
All right, perfect. So we can jump right in. Hopefully we'll have some time at the end of the presentation for any questions that come up. I don't know if there's a chat option for the attendees, but if there is, I mean, you can go ahead and put the questions in the chat. Some of them we might be able to get to today. Some of them I can probably take back with me if you want to connect and get some answers on maybe some more complex questions. So the point of this presentation is basically bookkeeping basics. So it's really to help you understand and develop the necessary steps to maintain accurate and effective records for your tax, banking, and payroll purposes. So we're going to touch a little bit on all of the aspects of bookkeeping and what you should be doing when you're starting a new business. Okay, so why record keeping? Well, I mean, the obvious answer to those questions is to have the proper record keeping is to file your taxes. So whether that be your corporate taxes, your personal tax return, your HST returns, these are all filing requirements and really require you to have good record keeping. You want to make sure that you're accounting for all the bank transactions, for all the business transactions, and also to help you determine how your business is doing and if any changes should be made. So in the presentation, I'll speak a little bit about different softwares that we can use, and all of those will help you in maintaining those records, making sure that there's different ways to get the transactions in. Some are more manual than others, but it's really important to have something, whether it be a software, whether it be an Excel sheet, something where all of your transactions are categorized and everything is together. Should CRA ask you for all of this information, you need to be able to provide something in writing that shows where you've tracked everything. I strongly suggest that choosing the right software is very important. So there's many, many different options. QuickBooks Desktop, QuickBooks Online, Sage 50, which is the old Simply Accounting. They have a desktop program. Sage 50 also has an online program. There's other online softwares as well. You know, there's Xero, there's Wave, there's FreshBooks. There's quite a few free softwares. You just have to remember that you kind of get what you pay for at the end of the day. So depending on what features you're looking for and how complex your business is, we're big on QuickBooks Online, so I'm going to reference back to that one quite often throughout this presentation. And that doesn't mean that that's the only one that you should use or look at, but I strongly recommend having a software. Some people still do it in Excel, which is fine. However, again, for reporting purposes, if you're using a software, you'd be able to run some very specific reports and provide those to either the bank or CRA, to anybody maybe that you're selling your business to or anything like that. So it's important to have like a reporting process. There are also integrated apps. So this is where I'm going to reference back to QuickBooks Online. There are apps that connect with the online softwares. They also connect with Xero and Wave. For time tracking purposes, receipt management, helps you track your mileage, to look at your accounts receivable, your accounts payable, your inventory tracking. So there's a lot of them where, I notice a lot of clients have a hard time sometimes with smaller receipts. They end up in your pocket, they end up at the bottom of the truck, they end up anywhere else but where they're supposed to be. So having something where for receipt management is very handy. And I think, that's the one where a lot of people kind of gravitate to the introduction to apps is by looking at something for receipt management. Nice and easy. It's an app on your phone. Take it out, take a picture. It files it in, under SO or under Tim Hortons or under a heading account for you within the software, and a PDF copy is available to you. In many instances, this will connect directly to your accounting software and will post a picture, attach a PDF copy in with the transaction. So it also makes things easier at the end of the year for your accountants. It would be nice to do probably a presentation on just software and kind of go over demos of some different ones. But for now, I mean, here's the list, and I think you'll have a copy of this presentation as well. So you'll be able to maybe see which one fits best for your business. So once you choose your software, the next step is setting up your chart of accounts. So your chart of accounts is basically everything that encompasses your business. So you're going to have your bank accounts, your accounts receivables, your fixed assets, your accounts payable, your credit cards, all of your loans, your debt, your long-term liabilities, drawings or owner contributions, withdrawals. So that would be like your shareholder account. So anything personal that you put into the business or any money that you take out personally from the business would be posted there. And then, of course, your revenue and your expenses. The nice thing about having it in a software again is that you can do reports based on only certain of these accounts. So, your bank accounts, your accounts receivable, fixed assets, accounts payable, credit cards, loans and drawings would be your balance sheet accounts. And then your revenues and expenses would be your income statement accounts. So this way you can look at a report of this is how my business is doing, and these are my revenue and expenses for a certain period of time. So it's important to make sure that you have all of the accounts set up properly. Most of the softwares that that I mentioned before have like a list of templates. So when you're starting your account, you're choosing this is the industry that I'm in, and it will give you a template of, kind of like a starter chart of accounts that you can use. And then you can always add, subtract, and, split anything that you want to see in more detail. So the next step when you're opening a new business is you want to set up your bank and your credit card accounts. So by this I mean like the physical bank accounts, going into the bank and setting up accounts under your under your company name. So it's really important to keep your business and your personal transactions separate. Now, I know some of you might be in a position where you're incorporating your business, and some of you may be a sole proprietor. So I understand that when you're a sole proprietor, your business and your personal are the same person or entity. However, it's still a good idea to open a bank account under the business name so that way you don't have all your personal transactions in mixed in with the company transactions. It also makes it easier to track. This way you're sure that anything that's on this bank statement is for business. So in a lot of these online softwares, you can connect a bank feed or you can download transactions from the bank and import. You don't want to have to weed through the personal transactions and the business transactions, so it's just easier to keep things separate. Another thing to consider is that if you don't have a business account that's in your business name and everything is going through your personal account, should a CRA auditor ever need to be looking at your books, they could also request your personal bank statements. So just keep that in mind. That's why it's nice to have it all separate, is that you don't necessarily want to offer more information than needed. And then it would make it easier to reconcile the bank and the credit card accounts. So the reconciliation process is basically at the end of each month or at the end of each period, you would look and say, here are all the transactions in my bank account, and now they are in my system. Here's my ending balance, my ending date, and that you make sure everything is recorded so nothing is missing. And again, you don't have to weed out the transactions, your personal transactions that would be on those accounts. That being said, I mean, it happens sometimes you're somewhere and you only have your business you only have your business card, or you've forgotten your personal card at home. It's fine to still use it. It's just you have to make sure you categorize it properly in your chart of accounts when you're doing your bookkeeping. So the next piece is looking at your accounts receivable and your accounts payable subledgers. So once you've got everything set up, you're in your software, you've got your chart of accounts, now you're starting to pay bills and you're starting to invoice clients. So you want to make sure that you're reviewing this accounts receivable and this accounts payable subledger for tracking purposes. So you need to make sure that you understand the difference between your customer invoices and payments and your vendor invoices and payments. So customer is money in, vendor is money out, and those are separate. So any of these softwares will have a sales module and then an expense module. So just making sure that you're putting the transaction in the right module. Another important thing to remember is understanding the difference between a credit memo versus changing invoices. So in any sort of accounting period, you're going to have an HST period if you're registered. For example, you could be on a quarterly basis. So your January to March HST collected versus HST paid would be due at the end of April. Well, in that case, you want to make sure that whatever you have in your system at the time when you make that filing stays the same. It stays consistent. If ever there was an audit and they went back and looked and they would see that something had changed in your GL, they would wonder why. So this is why it's important to understand your cutoff dates and to understand what transactions to use after that period has been more or less closed. So in that case, if you had an invoice and let's just say the invoice was dated March 30th, your customer receives it on April 5th and they call you and they say, hey, remember you were supposed to give me a discount on line 6 of that invoice. Now, if you've already filed your HST for the period ending March, you don't necessarily want to change that invoice. So you would go in and create a credit memo and apply it to that invoice instead. So, I mean, these are all very, high level kind of overview. But this is where it becomes important if you're doing your own bookkeeping to make sure that you've had some, the proper training and just to make sure that you understand the differences. There's lots of, videos when you're going through, let's just say QBO, they have little how-to videos right in the software. So, I mean, those are good to watch. They explain what each transaction does and what the outcome of the transaction is, but it's still a good idea to make sure that you have the proper knowledge as far as what transactions should be used. Another thing to think about is bad debts and bad debts recovered. So at the end of a financial period, your accountant will ask you, to review your accounts receivable. So your accounts receivable report is who owes you money. And, you can date that at the end of your financial period. So when you're looking at that, if you're saying, I sold Joe down the street something and it's been 8 months, and it's a $15 invoice, he never paid me, I probably won't see that money. You can choose to write off that invoice. Well, a transaction will be done to bad debt, which then moves it from an expense. It moves it from the income and it creates like an expense to balance it out. Now, let's just say that happens. It's written off to bad debt at the end of the year, and then Joe decides to send you a check in 3 months. Oh, he forgot. He found the invoice. He's going to pay you. That's when we would do like a bad debt recovered, and we would just move it back into income. So these are conversations you would have with your accountant at the end of the year. Another thing that is good when you're in a software is that you can send statements for accounts receivable. So if you're looking at it and you're saying, okay, I want to send my statements once a month, you can set that up where once a month your customer will receive a statement detailing all of the invoices that are outstanding. You just have to make sure that when you're setting up your invoices, it's always a good idea to look at things like due dates. You can choose to create new, net 15, net 30, net 60, net 90, depending on how long you want to give your customers to pay you. And then if you're planning on charging any interest on overdue accounts, you just want to make sure that there's a note somewhere on that invoice that details that they will be charged a percentage of interest on overdue accounts, and you want to make sure that you list that percentage. And then on the expense side, you want to make sure that you're agreeing the statements of accounts from vendors. So the same way that we would have an accounts receivable report at the end of a period, you could have an accounts payable report. So I'm going to use a mechanic shop as an example for this. There's so many invoices going back and forth. Parts are being purchased. When the parts are being delivered, an invoice is dropped off. That invoice is then being entered into the accounting software. Um, but not necessarily paid at the time when that is happening. So what is a good idea is if you're only making the payment once a month is that you enter the invoices as they're coming in, right? So you enter your bills into your system and then you're increasing your accounts payable. At the end of the month, when you receive your statement from, let's say, Maslac or Napa Auto Parts, you would see this is how much I owed them at March 31st. So this is and this matches what's in my books. If it doesn't match what's in your books, then you have to go through the invoices and see which ones are missing. What bills am I missing? And that way you're making sure that you have all of the expenses that you should have in your books, and then you're making sure that you're paying the right amount. I've seen it happen where I've received a statement for a client and I said, well, I don't have these invoices. When I received the invoices, they had another vendor, like they had another name on it. They weren't actually for my client, but somehow it was something that somebody else had ordered, had a name that was close to the same company, or it happens, mistakes happen. So you want to make sure that you're agreeing those vendor statements to what's in your books. And in order to do that, you have to have proper record keeping. So the next thing to look at is inventory. So again, going back to the apps, there's definitely apps that are available. Most of the softwares will have an inventory tracking module. They're just not very robust. So depending on how much inventory you have, how detailed you need it to be, are you looking at a warehouse and you're saying want to look at um, the sixth shelf, three down, in this bin, your inventory tracking system right in the software probably isn't going to be robust enough for that. So you would want to look at an inventory tracking app. A lot of these inventory tracking apps also come with a point of sale system, right? So when you're looking at something like Shopify, Fishbowl, Lightspeed, so they all come with a system where you would have a tablet or even the little block that plugs into a tablet so that people can tap their cards. And what it does is it keeps track of the inventory that you're buying and selling. So you just have to make sure that if you're using an inventory module that you're using a full blown. If not, then the information won't be correct in the system and the reports that you're getting won't be correct. So it's important to track your physical inventory, especially at year end. So even if you're not tracking it on a regular basis throughout the year, at your physical year end. So whether that be December 31st or a chosen date, if you're incorporated, you just want to make sure that at the end of that period, you understand, like you have a count. So whether that be on paper and Excel, um, or in a software, you just want to make sure that you have that physical count at the end of the year. At the end of the year, your accountant can make adjustments for obsolete or damaged goods. So it's important to make sure that you have a listing for that as well. And again, you can either use the software to do it or you can do a handwritten list. So it's just important to make sure that it's kind of in the back of your mind if you're carrying physical inventory, that is something that your accountant will ask you for at the end of the year. Okay, so fixed assets. So what are fixed assets? And that's like the question of the century. Fixed assets or anything that your business is purchasing that's expected to last over a number of years, right? So you don't get to claim the full amount of the expense. So when we're looking at, tools, let's say a hammer is not a fixed asset. If you're buying, a plow for your truck, that would be a fixed asset. So something that's expected to last over a period of time. Um, we used to have a rule of thumb about kind of when to question whether or not this purchase is capital in nature. It used to be $500. Now with the inflation and the cost of everything having went up, I would say, if you're spending $500 to $1,000 on any one item, so not necessarily, you're going to Home Depot and you bought 10 things and the order came to $1,000. But if you're going and you're buying one item and that item costs anywhere from $500 to $1,000, you have to stop and ask yourself, is this a fixed asset or is it an expense? When I'm looking at, let's say, construction companies, many times you go to Home Depot and it's not an expense to the business and it's cost of goods sold, right? So those are just things that you're purchasing in order to do business. So that wouldn't be a fixed asset. But anything that you're buying, like large tools, a vehicle, computer equipment, if you're working in an office, you would have your desk and your office chair and filing cabinets and stuff like that. So that would be a fixed asset, and that sits in the balance sheet portion of your chart of accounts. So that's when we were looking at those accounts. It sits up as an asset in your business. And then every year we do an entry to amortize a portion of that expense. So you claim a portion of that expense every year. Um, and CRA has a good chart online. So if you Google, fixed assets chart for CRA, you'll see that everything is different. So, you have different types of vehicles and different amount of years that they're going to be expensed for. So it's possible that when you're starting your business that you have assets that you already have and that you're transferring into the business. So it's important to talk to your accountant about how that's going to happen. And then again, just, is the purchase capital in nature? Just ask yourself that question every time that you're making a major purchase. Should this be capitalized or is it just an expense? You know, your accountant or your bookkeeper can definitely help you kind of decide what that is. And I mean, whenever it's in question, sometimes if you put it in an expense and it shouldn't be in the expense, then you can go ahead, like we'll usually ask you at the end of the year, we notice that you've made this purchase. Can you provide the receipt? And if you're using a receipt app, like a receipt management app, there's a good chance that that'll already be in the accounting software for us to be able to look at, and it makes it easier at the end of the year for us to know whether or not it's something we need to move over to a capital asset. So, I mean, the revenues, right? So tracking HST collected. So the revenues is obviously oh, I went ahead. Okay. So the revenues is obviously tracking your income. So the income that you're earning. So you have to make sure that if you're registered for HST, that you're also tracking the HST collected separately, right? So if you're doing it in Excel, you have to make sure that you have a column for HST specifically. The amount that's actually revenue to your business is the pre-tax amount. So even if you're collecting $113, the $113 is not the income to your business. It's not what you're taxed on. And when I say taxed on, we're talking like personal taxes or corporate taxes. It's the $100. The HST that you collect belongs to CRA. It doesn't belong to you. So it's important to kind of have that understanding when you're looking at cash flow and you're looking at the bank balance and so on, is to know that the amount that you've got deposited into your account includes an HST collected portion, and that part doesn't belong to you. So the revenue is the pre-tax amount. So any invoices that you create, any sales receipts that you create in your software, those would come up in your revenues. So when you're starting a business, you should apply for a business number with CRA, and then you have to decide whether or not you should register for HST. So there's online, if you actually just Google that, when should I register for HST? There's some really great examples on the CRA website. There's the $30,000 rule, which can get a little convoluted, but when you're looking at the examples, it makes sense. What it says is if you make under 30,000 in 4 calendar quarters, which would be an entire year, then you don't need to register for HST. You're still considered a small supplier. If you're if you exceed the $30,000 threshold in a single calendar quarter, you're no longer considered a small supplier and you have to register for HST. If you exceed the 30,000 threshold over the previous 4 quarters or fewer consecutive calendar quarters, but not in a single calendar quarter, then you have to register for HST. So I strongly recommend that if you're kind of hovering around that mark, around the $30,000 mark in any period of time throughout the year, that you double check that chart and the examples on CRA's website and make sure that you register when you need to register. Yeah, so expenses, so it's the opposite of the revenues. You want to make sure that your expenses are reasonable and current, and that you're only recording in your business the expenses that were incurred to earn business income. So, the trip to Mexico, if your business is all very like hands-on in Sudbury, is not a business expense. The hot tub for the backyard is probably not a business expense unless you sell hot tubs and you're using it as a demonstrator. And then you want to make sure that if you're registered for HST, that you're tracking the HST paid on purchases, which would be referred to as your ITCs, your input tax credits, separately. So again, if you're paying $113 for an item at the store, $13 would be the HST and the $100 would be the portion that goes into your expense, into your books. So when you're looking at your profit and loss or your income statement account in your software, you would see just the portion that's actually your income and actually your expenses. So if you're registered for HST, you'll have an HST period in which that you have to, in which you're reporting back to CRA. So it would be the HST that you collected minus the HST that you paid on eligible purchases. That is what you would owe them back at the end of the year. So they expect you to keep track of that and do your reporting on your own. So meals and entertainment receipts. So it's always kind of a touchy subject when you're looking at what you can claim and what you can't claim. So the important part about remembering when you're claiming meals and entertainment receipts is that you include the description and those attending on the back of the receipt. So just make sure that you've noted somehow that this was for business. This wasn't, you didn't take your family out for dinner after work, that, you took a potential client out, you took, maybe a vendor that you're looking to build a relationship with out for lunch, and you put a note on the back that just says, lunch with Joe to discuss ABC. You have to remember that when you're claiming meals and entertainment receipts, you can only claim 50% of the HST ITCs. So if you have, $13 of HST that you paid on this receipt, you can really only claim $6.50. The expense is only 50% deductible for tax purposes as well. So, it has to be reasonable. And again, your accountant can go over that with you at your end when looking. What I tell people is usually just if you have the meals and entertainment receipts, put them in your books. At the end of the year, your accountant will decide whether or not it's all available to be claimed or not, and we'll go over that with you. So you just have to remember that the meals and entertainment are, looked at or accounted for differently at the end of the year. So another thing to think about is your home office expenses. So are you eligible to claim an office in your home? So, do you work from home for a majority of the time? Can you work from home? Do you have a physical location for your office? And if you can, and if you're eligible to claim an office in your home, then you need to make sure that you're tracking your home expenses. So what you would need to do is make sure you have a spreadsheet set up, your mortgage interest, your utility bills, your telephone bill, anything else, repairs and maintenance, if you're building the office and so on, you need to make sure that you're tracking all of those expenses somewhere. And then you're also getting a portion of the HST, the input tax credit, so the HST that you're paying on those expenses. Usually the way that we do it is at the end of the year, we decide if your home is, let's say, 1,000 square feet and your office takes up 25% of that, then 25% of the total of all of those expenses would be claimed as your home office expense. It's very rarely 25%. I'm just kind of putting a number out there so that it makes sense. But um, again, so it's just to understand, who needs an home office expense, and if so, then make sure that you're tracking your home expenses separately somewhere so that you can have it. Don't, if you're paying your home expenses through your business account, and you're putting it all through the business and you're putting it into utilities and your software, then just understand that the numbers that you're seeing in your reports will change because at the end of the year, we're going to have to subtract some of those expenses, right? Some of them will go through your shareholder or your owner withdrawals, just because you can't claim all of your home expenses through your business. So vehicle usage for business. So I would strongly suggest you talk to your accountant about your personal vehicle versus your business vehicle and which expenses are deductible. So you have to make sure that you're tracking your vehicle expenses. Sometimes they're tracked by kilometers instead of the actual individual gas receipts, insurance, and so on. And then you have to choose a percentage to be claimed as a business expense. So if you're using a vehicle, like a personal vehicle, and you're saying, well, I'm using it 50% for business and 50% for personal, then you would need to track your kilometers throughout the year and say, well, I drove 20,000 kilometers, 10,000 of that would be for business. And then we would look at the expenses for that vehicle and do the same, the same expense transaction. So if you have any business vehicles that are used by employees, you have to keep in mind that if the employees are taking the business vehicles home, and they're employees to your business, there's a taxable portion, a taxable benefit portion of that for personal use of business vehicles. So before you make that decision to have a fleet of vehicles and send your employees home with them, just make sure that you understand what the implications are. Something needs to be put on their T4 to account for the fact that they're using a business vehicle for personal use. So again, we would track the kilometers, and there's a calculator online that we use, or we have our own tools, and we would be able to, it more or less adds income onto their T4 that they would then be taxed on personally so that they can account for, the fact that they didn't have to buy a personal vehicle or they weren't using their own personal vehicle. And again, the HST input tax credits all fit into play there. So whatever percentage of it is actually for business is what you would claim as your the 13% on that, on those expenses. So expenses paid personally, capital contributions, and withdrawals. So it's just really important to know that, there's going to be times where you're coming into a business and you've got all of these personal items that you're bringing in. So, you may not have had a business account when you were starting your business. So you purchased all of your furniture, your office desk, your printer, everything else using a personal card. So there's ways to put that in a system to make sure that you're getting credit for the fact that you used your personal money for a business expense, right? So that would be, or any money that you're transferring in. So you're opening a business account and you need to make purchases. Well, you need to transfer some personal funds from your personal account into your business account. So, you would have capital contributions in the same way of, if you've got money in the business and you're saying, well, I had put money into the business originally to start it. Now I'm going to start taking, withdrawals. So whether you're paying yourself dividends or, if you're not on payroll, and that's a conversation to have with your accountant is to decide which one is best for you personally. But it's just really important to make sure that you're recording all of that into the system and to make sure that you're not leaving out those expenses that you paid for personally, so that at the end of the year that they're listed in your business and they're contouring your revenue. So make sure you keep track of any receipts that you have from your personal account. So the next step would be payroll. So you've heard me mention payroll a few times. So there's a lot of things to consider when you're choosing to hire employees. Is when do you need a payroll account? Well, as soon as you hire an employee, you need to call CRA and open a payroll account. If you already have a CRA business number, it's a pretty simple process. You just call them and let them know that you're starting to pay employees and you need a payroll account. So they will open the same business numbers, the same 9 digits instead of RC for corporate tax or RT for HST, it would be an RP account. Um, so when you do hire employees, you want to make sure that you create personnel files for all of the staff. So it's important to make sure that you have all of their information. You want to make sure that they're legally allowed to work in Canada, so you need to make sure that you have their SIN numbers, and by giving them the TD1 form. So there's a TD1 federal and a TD1 Ontario forms, and you can find those on CRA's website. You make sure that you give those to your employees. This is where they would tell you whether or not they have like tax deductions that they want to take off at source. They would fill out those papers accordingly, and you would have that information to put into whatever software you're using for payroll. And that leads me to the next one, the CRA payroll calculator. So some people are just using the online CRA payroll calculator to calculate the employee payroll. Um, it's fine to do that. However, you have to make sure that you're tracking the deductions separately so that that way you have the amount that you need to remit back to CRA. I strongly recommend using your bookkeeping software. So whether you're using QBO, QuickBooks Desktop, Sage, they all have a payroll module that you can add on. Of course, it's an extra charge, but it's well worth not having to do it manually. And this way you can set up your employees in the software. Basically it just makes it simpler to prepare payroll. So you would just plug the hours in, and the software would calculate the payroll deductions for you. In some cases, you can even set it up where it pays the payroll deductions from the software to CRA. I mean, you still have to initiate the payment. However, it's done pretty well virtually behind the scenes. Another option is a payroll service provider. So when you're looking at, Payworks, WagePoint, Desjardins Payroll, these are like full-blown payroll services. You still initiate the payroll. You still go in and put your hours and prepare the payroll. However, that company takes care of doing the payroll deductions to CRA. It makes ROEs very simple if, there's layoffs or separations. And then it also takes care of the T4s, so at the end of the year for the tax slips. There's a little bit of an extra cost to that, but it's well worth not having the headache, especially if you're not comfortable with payroll, to make sure that it's being done properly. So, something to keep in mind when you do have employees is that when they cease to work with you, whether or not it's again a layoff, they quit, they're going on, um, any sort of leave, you have to create a record of employment. So anytime that there is a separation of more than 7 days, so they go 7 days without working and there's no employment income coming in, you're supposed to create a record of employment for them. So you need to make sure that when you um, start a business and you start having employees that you set yourself up with all of these accounts. So they're not all CRA. Records of employment are done through Service Ontario. So you need to make sure that you're signing up for Service Ontario, like a My Business account with Service Ontario as well, so that you can file your ROEs online. I think they would probably still let you file them by paper, but when you call and request the paper copies, they now kind of shoot you into the let's get you set up online, just because it's definitely a lot quicker and it's cleaner to do it that way. Another thing to consider is the taxable benefits. So again, if you're paying, let's say, a cell phone bill for one of your employees, well, if the cell phone bill is $100 and you're giving them $100, then a portion of that is going to be a taxable benefit because it's not within reason for the business portion that they're using, right? So if you're paying the entire bill and they have a personal use of that cell phone, then part of it is a taxable benefit. So it's just understanding what's a taxable benefit and what isn't. If they're taking a business vehicle home with them and they're driving it around on the weekends and they're going out of town with it, again, you need a taxable benefit to record that. Again, on CRA's website, there's a whole chart of what is a taxable benefit and what isn't, and what's a reasonable allotted amount to pay for certain things. So there's definitely a lot of information there. Or you can reach out to, your accountant or your bookkeeper, and they'll likely have those answers for you. Again, any employees that you have by the end of February of the following year, you need to file their T4s. So they're due to be filed and given to the employee by the last day of February. So on a leap year, it'd be February 29th, but they need to have access to it by February 29th. And then T4As as well. So T4As would be for employees who maybe aren't employees, but they're getting, grants or contract work, or they're still, you're still paying them money, but they're not an actual employee. So you're not deducting CPP and EI and all of those, all of the regular statutory deductions. The other exception is for subcontractors. So as soon as you're in the construction trade, instead of it being a T4A, you would have your subcontractors, you'd receive a T5018. And those are due 6 months after the end of your fiscal year. So if your fiscal year is December 31st, then they would be due by June 30th and so on. So that's the only time you'd use the T5018s. And these are just really information slips. It's to keep everybody honest. You want to make sure that you're creating those for the subcontractors. So once you have employees, you want to make sure that you're registering for WSIB, EHT, and your ROEs, so your Service Ontario. So these are just different entities that you then have to register with. So by the time you have an employee, you should have already registered with CRA, and you would have a CRA account for your HST, your payroll deductions, your tax returns, and then with WSIB and EHT, you have annual returns. EHT might not be something that you have to worry about if you're a small business. There's a $1 million exemption currently per year for EHT. So you wouldn't have to pay employer health tax on your wages paid until you hit $1 million. If you hit $1 million, then annually you have to file a reconciliation. WSIB, you should be registering for the WSIB. So you call them, you give them the industry that you're in, they'll give you the amount to pay and the reporting frequency. So this is something separate from your payroll that you would have to go into WSIB every month or every 3 months and report the wages paid and then pay that insurance for them. Yeah, so it's just important to make sure that you're registering everywhere where you should register once you have employees. Another thing to think about is your CRA website and My Business account. So it's important to be connected. It's important to be able to access all of your information. So you want to make sure that you're registering for a My Business account with CRA. It's the same thing if any of you have like a My account for individuals where you're going in and you're checking on your personal tax returns or credits. It would be the same type of account, but it would be for your business. So you'd be able to look at your HST account, your payroll account, make sure your payments have went through, make sure that they have the information correct. You're filing your HSTs. You can do that when you're online, logged in, and then the payroll calculator is also online. Um, Again, the payroll calculator is fine as long as you're organized enough to keep track of your payroll deductions. What you have to keep in mind is when you're hiring an employee and you're deducting the CPP and the EI and the taxes all come off of the employee. Whatever you take off of the employee in CPP, you match that as an employer. So there's an employer portion of the CPP and an employer portion of the EI. So if you have $25 in CPP taken off of your employee, you're also paying $25 to the government. So when you're doing your calculations for the money that you owe to CRA every month for your payroll deductions, which is due on the 15th of each month for the month prior. So usually, if you're a monthly remitter, which is kind of where you start, your January payroll deductions would be due February 15th. There's a pretty high amount of interest and penalties for filing those late, so I always tell people to make sure those ones are done on time. And any payroll service provider or software will do the calculation of the employer portion of the CPP and the employer portion of the EI. So EI is actually 1.4 times the amount that's deducted from the employee. So the employer pays more EI to CRA than the employee does. Um, just make sure that when you're paying your bills and your government remittances, it's important to learn how to do that online. So your business bank account will have almost like an add-on where you can pay and file business taxes. So it's important to do it online. CRA has now requested that these payments be done online. There are different thresholds. And if the threshold isn't met and you don't make your payment online, then there's actually a penalty for making your payment not online when it should have been. So it's important to kind of just make sure you know what the threshold is. I'm pretty sure it's 10,000. This is relatively new, but just make sure you inform yourself and you're making your payments in the manner that CRA wants you to make those payments. Okay, so bookkeeping, keeping all your receipts, including your credit card receipts, is really important. So you just want to make sure that you have a good system for keeping those receipts, right? So when I was mentioning apps that or like receipt management apps. So Dext is one of them. So that's a kind of a very high powered um, software where you would just take a picture of the receipt. You could have your employees also having access to their own Dext accounts where they only see the receipts that they're uploading. You can use it to do expense reports if they're out of town and they're traveling employees and they want to just upload their receipts. It would create like an expense report. And all of these softwares will speak to your accounting software. Right, so you can post directly from Dext into QuickBooks Online, into QuickBooks Desktop, into Xero. I'm not sure about the Sage Desktop won't accept that, but the Sage Online might. HubDoc is the same type of software. HubDoc is actually owned by Xero. Um, so it just usually we match Xero software with HubDoc, and we do QuickBooks Online with Dext. Dext is its own software, so it's not owned by any of the software providers yet. They tend to do that. Auto entry is another one. Auto entry is a Sage product. So, if you're going with QuickBooks, I would go with Dext. If you're looking at Xero for your software, I would do HubDoc. And then if you're looking at Sage, I would do auto entry. So basically, this just keeps a copy of your receipts. That way, if you lose the actual paper copy, CRA will accept the PDF copy that's uploaded into the software. QuickBooks Online has its own receipt capture built right into the program. So if you're, a smaller business and you're saying, I don't really want to pay the extra fee for this extra software to attach to my existing accounting software, you can just go ahead and use the one that's integrated in with QuickBooks Online. It's just not as robust. So there's certain things where it just won't read the receipts the way that you want it to read. So you may still have to categorize some things manually, but it's still a good way to keep a copy of the receipt in the software with the rest of your information. Right. So again, filing system is important by vendor versus by month. So you have to choose what's going to be easiest for you to find the information. By month, sometimes if you're doing it by month, it's great. I know a lot of people who just staple all of the receipts that are on this bank statement or on this credit card statement together and attach it with the statement, which is fine. It's just if you're looking for a specific receipt, you have to remember which month it was in to be able to go and find it. Whereas if you're filing everything in their own folders by vendor, it'll be easier for you to say, I need to go and look at my Maslac bill. So you just pull your Maslac folder and you're able to see all of the receipts that are in that folder instead of having to figure out which month it was paid in. Filing your taxes, you're taxed on the income your business generates. So that's your business income minus your expenses. So your net income is what you're taxed on. So it's really important to make sure that you have all of the information in your software or in your record keeping, so that you're not missing anything. You're not paying more taxes, when you're forgetting to make sure that you have expenses posted. Right? And that's why we reconcile our banks on a monthly basis to make sure that we're not missing any of the transactions, because sometimes you don't necessarily have a receipt every month for every transaction. So when we're looking at things like bank charges, insurances, loan payments, which would include a portion of interest. So you want to make sure that you're not missing anything that's on your bank statement. So that's why it's important to do the reconciliation process at the end of a period. So whether that's monthly, weekly, quarterly, every 6 months, every year, really depending on how big your business is. But we managed to get through all of those slides. So I went right through it. If anybody's got any questions, I'm ready to answer them.
Thank you so much, Ginette, for a very great overview of a lot of really good things that people need to consider when they're doing their books.
Yep. Well, and it's important, right? So it's just really understanding your business, and nobody knows your business better than you do. So it's understanding, everything that encompasses your business and everything that you're spending your money on, where your revenue is coming from, making sure that you're not losing money on jobs. So, I mean, to be able to compare your income and your expenses and, take a look at how much it actually costed you. So a lot of these softwares, when you're signing up for it, you can use different modules and different features like classes. So if you're working on multiple projects at a time, some of them even have like a project module, but you can look at it and say, I want to assign all of these expenses to this class. So whether the class is like a rental property, so maybe you have a rental property on First Avenue, Second Avenue, Third Avenue, and you want to make sure that you're classifying the income and the expenses into the right class so that you can look at it as one entity, right? So it's all part of your business, but you can look at property A, property B, property C, and see which one is making money, which one is costing you more money. Maybe you need to uh, find a way to save money on these expenses. So I mean, you can do that the same way with like construction projects, right? So if you're building homes, you can say, well, obviously I'm spending way too much money on this one. I didn't make, my bottom line on this project isn't as much as I would want it to be. So what can I do differently next time? Am I looking at the vendors? Maybe I need to open an account. Maybe I need to look at, buying group power, different things like that. So it's important to be able to visualize what's happening with your business.
Mhm. Okay, well, I just want to invite the group. There is the chat feature, so you can ask a question. But I do have a question,
Sure.
Jeanette. When would it be a good time for a business owner who's been doing their own books to consider going to see a professional bookkeeper? When is the
Well,
best
I
time for
think
them to shift?
I think a lot of business owners are perfectly capable of doing their own bookkeeping. So I think if your accountant is at the end of the year having to make many, many adjusting journal entries. So at the end of the year, you're bringing your books in and you're getting it back and you're getting a stack of, 25, 35, 40 adjusting journal entries. Basically what that's doing is it's telling you that there are things that we had to adjust at the end of the year. So there's things that aren't being properly done. So I think it's really important to have like a good communication with your accountant and to be able to say, what was I doing right and what was I doing wrong? Do I need help? Right? So your accountant will usually, hopefully, be upfront enough to say, listen, the bookkeeping wasn't very clean and we had a lot of work to do at the year end. So if your accountant has a lot of work to do at the year end, one, it's going to cost you a lot more money because your accountant is having to do more work that should have been done at the bookkeeping level. So if you're wanting to save money on your year end, then a professional bookkeeper would be probably a good investment, right? It might not be as expensive to have the bookkeeper at a bookkeeping rate do these entries and to keep proper bookkeeping than it is to have your accountant fixing things at the end of the year. You know, if you're somebody who's great with numbers and it it works out and the accountant is saying, hey, you're doing a great job, the books were nice and clean, then I don't think there's a reason to spend more money on having somebody else do it unless it's at a point where you're saying, like, I'm spending way too much time doing this and I need to be more involved in the day-to-day activities of my business. Then I think the bookkeeping piece is a good piece to be able to give up, right? It's a good piece to be able to, just because there's the option, there's lots of accounting firms, they seem to all have bookkeeping departments. You know what I mean? There's a lot of independent bookkeepers who have their own practices. There's just a lot of options, and it's a good piece to be able to give up.
Mhm. Yeah, fair. That's great feedback. Is there like an all too common error that you've noticed that people have made on their books that keeps happening? And is there any solution to that error that you keep seeing?
Just not reconciling the bank. Right. So I think what's really important is that when I keep talking about bank reconciliations, I talked about the chart of accounts and having your bank account set up is a lot of people see money in the bank. So, let's just say they see 30,000 sitting in the bank and they're like, yay, I have 30,000. Well, you don't actually have 30,000. Right. So the physical bank account, when you're opening it up and you're looking at your Scotiabank app or your RBC app, that money that's in the account is not necessarily what you have available to you, right? So if you're keeping proper bookkeeping, you're going to have the outstanding checks that are in circulation but haven't been cashed will be affecting your bank balance in your books, right? So it's important to keep the proper record keeping so that when you look at your bank balance in your QuickBooks account, for example, you would see that maybe there's only 15,000 because you've got $15,000 worth of checks that you've written and you've mailed out. They just haven't been cashed. So it's having an unrealistic expectation that when you're looking at your bank balance that's available funds, and it's really not, because again it includes the HST you collected if you're registered, which isn't your money. It's something that you're going to owe back. You may not owe it back next week, but you're going to owe it back in the foreseeable future, whether it be 3 months or 6 months or a year or however often they're requiring you to remit, but it's not your money. So I always suggest too that it's really important, um, for business owners to maybe have a savings account. And if you're keeping the proper record keeping, you can look at the amount of HST you collected in that month. And if you transfer just that amount from your operating account into the savings account and keep that for when you owe your HST, you're never going to be stuck in a position where it takes you by surprise and you don't have the available funds for it.
That is great advice. Moving, all the money you've collected for taxes into a savings account. Yeah, that's
And
wonderful.
usually you have HST ITCs, right? The HST that you paid that you're going to claim against that. But at least if you're moving an amount that's reasonable into a savings account, you're not stuck. I find restaurant owners run into this all the time because their HST, their sales all have HST collected on them, but many of their purchases are fresh food, which you're not paying HST on. So if you're not paying HST, you can't claim the ITCs just because it's an expense, right? You have to make sure that your receipt has HST on it in order to claim it. So a lot of the times, restaurant owners will get the huge HST bill at the end of the quarter or at the end of the month and go, wow, like how come I owe so much as compared to my buddy who owns, a construction company? I'm thinking, well, because everything he buys at Home Depot has HST on it and everything you buy through, Harvest King and, the other suppliers for fresh food doesn't have HST on it. So it's really important to like understand your business in that sense.
That's another great tip. Okay, well, thank you so much, Ginette, for this excellent presentation. Just as a follow-up to everybody still on the call, we're going to be following up with an email with just a quick survey for you. And this presentation was also recorded, so you'll have the option of rewatching it, perhaps while you have QuickBooks or, or something like that open, so that you can kind of have a bit of a refresher. Okay, all right, thank you so much.
Okay, no problem. Everybody have a good
Okay,
day.
take care.
Bye.
Bye.
Thanks, guys.